Well, hello there. This is Slav Flinsky of Slav Flinsky Homes, Downers Grove, Illinois, and welcome to this episode of our series in home buying and home selling tips. Today we are meeting with mortgage banker Keith Hoffman again, Draper Kramer, Downers Grove, and we're going to talk specifically about interest rates, how they vary from buyer to buyer, and how to really find out what interest rate you qualify for. A lot of great information in this video, so let's jump into the conversation. Well, hello there, this is Slav Flinsky, Slav Flinsky Homes. We're here again with mortgage banker Keith Hoffman of Draper and Kramer, and we're going to talk about interest rates. First, Keith, tell us a little bit about yourself and your business.
Well, as a mortgage banker, we fund everything ourselves, and we actually have done over $3.5 billion in 2019, which is a great amount of purchase business and refinance business. Been in the business about 29 years, very educated in the business, so I seem to think I know something until they change something, which they do all the time.
Absolutely, and I've worked with you with my clients, so I definitely do know that you know a little bit about the home mortgage business.
Thank you.
So what I'd like to talk about today is interest rates, and specifically, I find, especially first-time home buyers, they're a little bit surprised. They see advertised interest rates, whether it be in newspaper ads, magazine ads, or on a billboard. And then what they miss is that whole series of disclosures that's on the bottom, and they're a little bit surprised when they sit down with a mortgage lender like yourself that their interest rate quite isn't what they saw as advertised. So what I'd like to do is talk to you today about what affects buyers' interest rates.
There's a lot of things that affect buyers' interest rates. The first thing is we look at credit scores, we look at down payment, whether we look at is it a purchase or a refinance, is it a first home, a second home, or an investment property. So there's a base rate, and then there's adjustments based on that. Now, if you asked me what my rate was today, I would ask you, well, how much do you want to put down? Do you have good credit? And these kind of things help me go to what the interest rate should be. Now, it's very easy for me to do that. I just put it into the computer, and it'll tell me what those adjustments are. But it's pretty easy when we do that.
Fantastic. So I know you can't give me an exact number because everybody's situation is a little bit different, and we're going to talk about credit scores in another video. But how much does a person's or a family's credit score, whoever's applying for that loan, affect the interest rate of that loan?
Well, you know, it can be a drastic amount. For instance, if today's rate was 3.875 and you had these bad adjustments and you were at 4.5%, you are going to have a payment that's about $52 or 50 or so more than 3.875. Now, what that equates to is a lot of money. If you're looking at a 5-year time frame, you know, it's over $3,000 that you're spending more than you don't need to.
Sure, absolutely. So it's beneficial to the buyer to make sure that they keep track of their credit before they purchase a home.
Yeah, you can actually go online. Annualcreditreport.com was set up. Annualcreditreport.com was set up by the government so that you can check your credit and see what it looks like at any time from all three of the bureaus, at least once a year for free. Now, I'm going to suggest that you don't buy those credit scores because you don't have to. That's not the important thing. The important thing is that your lender looks at it to see what kind of issues or problems may be an obstacle when you're doing the mortgage.
Fantastic. That's great information. What was that website again?
Annualcreditreport.com.
Annualcreditreport.com. Thank you. Besides the credit score and down payment, is there anything else that affects a home buyer's interest rates when they purchase a home?
You know, the one thing that you need to look at is not only the interest rate, but the APR, the annual percentage rate. And the annual percentage rate actually takes into consideration your closing cost. So if you ask me what my interest rate is, and I had 3.5%, somebody has 3.875, you think, great, that's what I'm going to do. I'm going to use Keith. The problem is you have costs that are incurred.
Sure.
So when you incur those costs, it pushes the annual percentage rate higher, and when that happens, that's really the thing that you need to do to look at whether an interest rate is good or bad.
Great information. And since we're talking about how credit scores affect interest rates, some of the viewers might be thinking, well, in order to buy a home, I have to have a super high credit score. Approximately with home purchases, what are the guidelines on credit scores and what could a buyer possibly qualify for with their credit score on the low side?
Well, you know, there's a lot of lending programs out there right now. It used to be 620 or 640 was the minimum score. And we can go below that. If you're going to go below 600, you're going to be hit really hard with the interest rates. So as a comparison, you might have a normal 4% interest rate, but if you're below 600 and putting down a small amount, you might have 4.75%. So now you're paying over $100 a month more. And it's a real difficult thing for buyers to deal with. So it's a good idea to talk to your lender ahead of time so that you can figure out a game plan if you have those kind of issues.
Great. So again, great information here. If you're considering buying a home and you see the advertised interest rates and you're trying to figure out what your monthly payment's going to be, that may or may not be correct. So it's best to sit down with somebody like Keith to really find out where you stand and how much you could comfortably afford in that new home that you now want. Again, this is Slav Polinsky at Slav Polinsky Homes. I hope you enjoyed this segment of our home buying and home selling tips series. Today, again, we talked about interest rates with mortgage banker Keith Hoffman at Draper and Kramer. So when you're considering purchasing your first home, it's best to consult with people who have done this many times, your realtor, your lender. Make it a great day.